Hi, I'm Frederick with Country Real Estate. Millennials are buying homes in 2025, yet a growing number are ditching traditional mortgages. And it's not just because they can't qualify. Many have great credit, stable jobs, and solid incomes. So why skip the bank? High interest rates, years of student loan payments, and rising housing costs have altered how the largest generation of homebuyers approach the market. Some see a mortgage as a burden rather than a milestone, while others are using alternative ways to compete without relying on a bank. Here are the main reasons behind this change and whether or not it's a smart decision. Number one, student loan fatigue and credit concerns. Many millennials have spent years managing student debt while paying high rent and covering everyday expenses. The thought of adding a 30-year mortgage often feels like too much of a commitment. Some choose to wait and save their money to buy smaller homes outright, avoiding interest, lowering expenses, and keeping financial flexibility. Number two, family wealth and financial help. Support from parents and grandparents is playing a bigger role in home purchases. Large cash gifts or substantial help with down payments allow buyers to skip the mortgage process entirely or reduce the amount that they need to borrow. This speeds up ownership in high-rate markets and leads to more cash offers from younger, well-backed buyers. Number three, self-employment income challenges. A lot of millennials work in freelance, gig, or entrepreneurial roles. Even with strong earnings, they often struggle to meet the strict documentation standards required by traditional lenders, so they opt to save until they can purchase outright, while others use private lending or shared equity for more flexibility and fewer restrictions. Number four, technology is making cash offers possible. Advances in financial technology have opened new doors for buyers who want to compete with cash offers. Purchase before selling programs and Fintech platforms provide upfront funds so buyers can secure a property immediately and arrange financing later, allowing them to skip traditional pre-approval. And that brings us to number five. Is skipping a mortgage a smart move? While skipping the mortgage process sounds appealing, it's not the right move for everyone. Here's why you might not want to go this route. Number one, draining savings and investments. Paying all cash can leave you house rich, cash poor, with less money available for emergencies or other investment opportunities. Two, missing out on leverage. Financing lets you keep your money invested elsewhere, potentially earning more than your mortgage interest rate is costing. Three, lower liquidity and flexibility. Real estate isn't a highly liquid asset, so accessing that cash later can take time and will depend on the market. Four, possible credit score stagnation. A well-managed mortgage can boost your credit over time. Skipping it may slow or limit that growth. So, is it a wise move to skip getting a mortgage? The cost of borrowing is your interest rate. That is still relatively low. The financing strategy that makes sense depends on your overall financial picture, your long-term goals, and your tolerance for risk. Buying a home is a major decision, and it should feel like a smart, well-planned move, not a stressful leap. That's why it's important to understand your financial options before moving forward. Having the right strategy makes all the difference. If you have questions or want to talk through the best approach for your situation, feel free to reach out. I'm here to help.